UiPath reported quarterly financial results that sent the stock price higher. Of course, I'm happy about that because I've had UiPath stock rated as a buy all year long. But even after that stock price increase following the company's earnings release, the stock is still down roughly 10% year to date in 2025. It's been one of the less performing stocks on my list of buy recommendations or on my list of buy ratings for 2025. So in this video, I'm going to review the company's latest financial figures, share with you the big picture items that you need to know about, and I'll update my proprietary discounted cash flow valuation model, or I already updated it, and I'm going to share it with you in this video. And then I'll share with you the company's valuation on a forward price to earnings basis, all before I answer the question whether or not I still think this stock is a buy. I'll do all that in this short video, so let's get right into it after a brief message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
And so UiPath reported their quarterly financial results on September 4th, 2025, and the CEO and founder said they delivered a strong second quarter with annual recurring revenue increasing 11% to $1.723 billion, reflecting the team's improved execution and the growing momentum of their agentic capabilities. Now, this comes after Daniel Dines replaced the formerly appointed CEO and retook the helm as CEO. The founder was the CEO and then replaced himself with a CEO and then came back after replacing that newly appointed CEO. So there was a lot of change at the top at this company. And I think investors were not very excited about that. There was too much movement at the top, and that got investors a little bit concerned about the company's leadership and the leadership plans. It's good to see that the founders' retaking of the helm is working out well now, and the company's execution is improving. Revenue growth is accelerating. Annual recurring revenue is accelerating. So kudos to the founder, Daniel Dines, for making a positive impact on the company's results. Overall, revenue came in at $362 million. That was up 14% year over year. Annual recurring revenue came in at $1.723 billion, and that was up 11% year over year. Net new annual recurring revenue came in at $31 million. The forecast looking ahead suggests that net new annual recurring revenue is going to accelerate further up to $50 million. So that was a big positive. I'll share that with you in just a little bit. Dollar-based net retention rate at 108%, that's positive. Now, what this means is existing customers with UiPath in their second year of service spent 8% more than they did in their first year of service. And that's a good sign for the customer value proposition. And as you know, if you don't, in my book, I devote a whole chapter to the customer value proposition because I see it as so important to the investment thesis, given how important it is to the company's revenue and cash flow expectations. So this number is good. It means that existing customers are spending more with the company, and that's evidence that they offer a good customer value, because otherwise, why would existing customers spend more in their second year than they did in their first year? They wouldn't, right? They would decrease their spending or cancel their service altogether. Non-GAAP operating income came in at $62 million, and cash flow from operations increased to $42 million. Looking ahead, the company expects more of this positive performance to continue. They're forecasting net revenue of $392.5 million at the midpoint. That would be up about 10% from the previous quarter, where they reported $362 million in revenue. That's a big increase quarter over quarter. They're forecasting annual recurring revenue of about $1.773 billion as of October 31st, 2025. And that would be a roughly $50 million improvement from the ARR of $1.723 billion. So that would be net new ARR of about $50 million for this upcoming quarter, which would be an acceleration from the $31 million they just reported. So again, they expect the positives to continue. Non-GAAP operating income is forecasted at $70 million in the upcoming quarter, whereas in the current quarter it was $62 million. So a more than 10% increase quarter over quarter in this category as well. So improvements in all the various important categories for UiPath, and I can understand why investors got excited and bid the share prices of this company higher. Looking at the financial statements more closely, in the 3 months that ended July 31st, total revenue increased, as you can see here, to $361.7 million, up from $316 million. But more impressively, the operating loss improved by nearly 5x, from $103 million loss to $20 million loss. And if you look at the 6 months ended July 31st, the improvement is more magnified. $153 million loss in the same 6-month period last year, down to a $36 million loss in the same 6-month period this year. In the 6 months that ended July 31st, cash flow from operations improved from $146.4 million to $160.6 million, a roughly 10% improvement in that category. So improvements across the board for UiPath in all of its important categories, and management forecasting even better improvement in the upcoming quarter and quarters ahead. So now let's look at the share price as it relates to my fair value calculation. So my intrinsic value per share for UiPath has this business worth $17 a share. The current market price is $11.31. So even accounting for a margin of safety, the stock looks undervalued based on my DCF calculation. Furthermore, when I go to fiscal.ai, which is my preferred data provider, there's a link in the description if you're interested in a discount for fiscal.ai, and I look at the company's forward price to earnings ratio at 17. This is about the cheapest you've been able to buy UiPath stock going all the way back to January of 2024. So you've got a company improving its critically important financial metrics. You've got the forecasts looking like they are going to accelerate those improvements. And the biggest fears from the company losing market share as a result of its AI and automated solutions for business processes, losing competitive advantage to other processes facilitated by improvements in artificial intelligence. Some of those risks were alleviated in this quarter's report and in the forecast for the next quarter improvement. Now, those risks are not completely eliminated, they were just reduced, and that plays a big role in the expectations for UiPath. That's one of the main reasons why UiPath is trading at such a cheap valuation, is because of those risks of the company's competitive advantages as it relates to other companies offering similar services using artificial intelligence. Still, I think the risk versus reward is attractive for UiPath stock investors, and I will update that I like this stock at the current market price, and I still believe this stock is a buying opportunity for long-term investors. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.